Wall Street and lower as AI sell-off resumes. The Dow Jones sheds 228 points while the Nasdaq falls close to 2%. Asian markets open lower and GIFT Nifty is suggesting a flat start for the Indian markets. And oil prices rally after US President Donald Trump blocks oil tankers entering and leaving Venezuela, raising global political tensions. Gold and silver prices also inch higher on soft US labor reports. Good news for mutual fund investors. The market regulator SEBI has approved new norms around mutual fund expense ratio, excluding all statutory levies from the calculation. Also caps brokerage at 6 basis points for all cash market transactions. The national capital continues to grapple with severe pollution and dense fog, prompting the implementation of GRAP Stage 4 measures. And the Supreme Court also allows ban of end-of-life vehicles, reinstating ban against the diesel vehicles older than 10 years and petrol vehicles older than 15 years from plying on Delhi roads. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. A lot's that happened in our domestic market last evening. We've seen a lot of updates that are coming in there. US market, the sell-off has continued because of the AI and AI related shares. That sell-off has continued. So Asian markets today are indicating a red start for the Indian markets as well. Look at the Asian markets, opened up with cuts of 0.1%. That's Taiwan index. Hang Seng has opened with cuts of 0.6% as well. We have the Japanese index Nikkei that's seen a sharper cut of almost 1%. Shanghai too is trading with very sharp cuts. Other than that, we have ASX 200, that's the Australian index, that has also opened with cuts of almost 0.3%. Looking at the South Korean index, that's the Kospi, that's down also 1.3% in opening trade. The small cap Kostak is also down 0.64%. This is the South Korean indices that we're talking about. So overall, we're seeing red on the screen for the Asian markets. Now let's pull up the Nifty implied open. What's the indication coming in there? That's also indicating a bit of a red start for the Indian markets. As of now, 26-point decline, and seems like yesterday and the last few days where we have seen red on the screen, that is expected to continue. At least that's the indication that's coming from the Nifty implied open. So we'll watch out for that. But that's the Asian markets for you all. A lot that's happened overnight, like I said as well. How is all this going to be impacting our Indian markets? We have a team of research joining us to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, let's go across to Gaurav now, who is joining us to tell us the important market cues that we are keeping an eye out on today. Good morning, Gaurav.
Well, good morning. If you look at Nifty, we are seeing a shade of red every day for the last 3 days consecutively. So today, if we look at the levels, yesterday we saw Nifty was able to hold that 25,800 level. 25,800 now becomes a key level to watch out for. The resistance is somewhere between 25,000. The support level is between 25,750 to 25,800. So that is a key thing to watch out for in Nifty. While on the upside, 26,000 seems to be a resistant level. So that is also something that we should be watching out for. If there is any up move, if it sustains about 26,000, we can see some bullish move going ahead. Other than that, yesterday, if we look at the indices specific to the sectors, Nifty PSU Bank, that was the biggest gainer, that gained almost by 1.3%. With some of the candidates like Canara Bank, PNB, Bank of India taking the lead. So let's see if this rally continues even today. On the flip side, we saw Nifty Realty that slipped almost by 1.7%. So let's watch out for realty stocks for the day. Other than that, stock specific, if you look at the action, yesterday we saw Shriram Finance that gained almost by 2%, and this is because of the board meeting that they have tomorrow, and also because of the speculation that MUFG is interested in buying. Let's see if the rally sustains even today, because the valuation that reports suggest is still higher than the current market value. On the flip side, we saw Max Healthcare, Polycab, Dixon actually losing in trade, lost almost more than 2% in the day yesterday. So let's see if there is any sustainable move that we can see in these stocks. Specifically, let's also focus on Ola Electric, because this is at their all-time low level, and promoters sold yet another 4.2 crore shares in open market yesterday. Lastly, from the IPO market, we are getting KSH International, whose last day is there for subscription. Remember, if you look at the subscription data, it is not so strong, but we are tend to see a strong subscription data on the last day. So let's see if it sustains. From the global markets, we will be watching out for US CPI and jobless claims, and ECB, which is European Bank, they will also come up with their interest rate decision. So let's see if anything significant is there to read. And lastly, let's also not forget about Bank of Japan. They are also holding their monetary policy meeting. Remember, the decision is going to come tomorrow. Street is expecting 25 basis point of increase, which will be highest in the last 30 years. And that is the reason why we will be closely watching out of this event, because this can actually reverse the carry trade between US and Japan. So let's see how it impacts not just Japanese market, but the global market as well.
Okay, thank you so much for that, Gaurav. But let's now go across to Ria, who's here to tell us which are the important stocks that we should be keeping on our radar today. Good morning, Ria.
Well, good morning. First up is Ola Electric. The founder, Bhavish Agarwal, has sold roughly 4.2 crore shares, and this is after selling 2.6 crore shares on Tuesday. On Tuesday, the company had said that this transaction was being executed to fully repay a loan of roughly 260 crores. Until now, both of these transactions come out to be roughly 234 crores. And with this, it is important to know that all of the previously pledged 3.93% shares of the company will be released, which will remove a critical overhang for the company. Moving on, Cyient Limited will also be in focus, and Cyient Semiconductors, which is a wholly owned subsidiary of the company, is going to acquire more than 65% stake in Kinetec Technologies, which is a global leader in power management, high performance analog as well as mixed signal ICs. This will be for an amount of roughly $93 million, and the transaction is expected to close by April of next year. Ugro Capital is going to issue NCDs worth up to rupees 200 crores with the option to retain oversubscription up to rupees 500 crores. GMR Power has also approved a fundraise worth 1,200 crores via preferential share issues as well as warrants. Titagarh Rail will also be in focus today. They have received an LOA worth roughly 273 crores from the Indian Railways to design, manufacture and supply rail-borne maintenance vehicles, which are RBMVs, and these are to be delivered within a period of 48 months. HCL Tech will also be in focus today. They have signed a multi-year contract with ASN Bank, which is the fourth largest retail bank in the Netherlands, and this is going to be done to accelerate digital performance as well as enhance customer experience. Geo Financial has appointed Venkata Peri as the group COO with effect from the 22nd of December, so keep your eye on that as well. KP Energy has signed an MOU with the government of Botswana to collaborate on developing large-scale renewable energy and power infra development, and this is going to require an investment of roughly $4 billion, which comes out to rupees 36,000 crores, and these projects are expected to help increase Botswana's renewable energy capacity to nearly 5 gigawatts.
Okay, thank you so much for that, Ria. And in the final update for FNO, what are we keeping an eye out on? We have Mangalam joining in with us from the FNO desk. Good morning, Mangalam.
Good morning. So, yesterday the market had all the reasons to perhaps see some sort of recovery. That's rupee strengthened itself, but that did not happen. We had the Nifty Bank, the mid-cap index not do particularly well. Second day in a row, we had more declines than advances, and the decliners were to the tune of 2,000 stocks, and the advances was just around 885. The Nifty, however, managed to close above that 25,800 mark, and in that got support from the 50-day moving average as well. So that is something that will give bulls some sort of relief. The INR strengthened versus the dollar, and that was reflective in the kind of cash market flows as well. The FI has bought about 1,200 crores, the DI has bought about 800 crores. A large part of that was also on account of the large trade from AkzoNobel, so we'll keep that into account. But despite the mild purchase that we saw in cash market, there was selling across in stock futures and index futures. Both of them put together, they sold about 2,400 crores. And with this, the FII exposure in index futures now stands at just 8% on the long side. In just the last 3 sessions, the FII shorts have increased by nearly 17,000 contracts. So the net contracts near 1.65 lakh on the negative side. If you look at a couple of these active options, that tells you that 26,000 is an important resistance. 25,900 call very active, premium of 100 rupees. But bulls are hoping for 25,700 to 25,750 play out as an important support, and that's why we are seeing writing in the 25,800 put as well. 26,000 call writers still believe that around 26,000 to 2650 there would be a fair amount of resistance. And why do I say that? Because if you look at the 20-day moving average on the Nifty, 26,018, we have to cross that. And for the Nifty Bank, crossing past that 59,300 mark, which is the 20-day moving average, will be crucial. Just one stock I will keep my radar on, or on my radar, will be Polycab. It was down 4% yesterday. A lot of short positions built on that stock.
Okay, thank you so much for that, Mangalam. In the world of FNO, we'll keep an eye out on Polycab especially as well. But on that note, let's cut across to the US President Donald Trump, who's addressing to the nation.
But not anymore. Companies know that if they build in America, there are no tariffs. And that's why they're coming home to the USA in record numbers. They're building factories and plants at levels we haven't seen. AI, automobiles. We're doing what nobody thought was even possible, not even remotely possible. There has never, frankly, been anything like it. 1 year ago, our country was dead. We were absolutely dead. Our country was ready to fail, totally failed. Now, we're the hottest country anywhere in the world. And that's said by every single leader that I've spoken to over the last 5 months. Next year, you will also see the results of the largest tax cuts in American history that were really accomplished through our great, big, beautiful bill, perhaps the most sweeping legislation ever passed in Congress. We wrapped 12 different bills up into one beautiful bill. That includes no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors. Under these cuts, many families will be saving between $11,000 and $20,000 a year, and next spring is projected to be the largest tax refund season of all time. Because of tariffs, along with the just passed One Big Beautiful Bill, tonight I am also proud to announce that more than 1,450,000, think of this, 1,450,000 military service members will receive a special, we call Warrior Dividend before Christmas, a Warrior Dividend. In honor of our nation's founding in 1776, we are sending every soldier $1,776. Think of that. And the checks are already on the way. Nobody understood that one until about 30 minutes ago. We made a lot more money than anybody thought because of tariffs, and the bill helped us along. Nobody deserves it more than our military, and I say congratulations to everybody. And by the way, we now have record enlistment in our military, and last year we had among the worst recruitment numbers in our military's history. What a difference a year makes. In addition, I'm doing what no politician of either party has ever done, standing up to the special interests to dramatically reduce the price of prescription drugs. I negotiated directly with the drug companies and foreign nations, which were taking advantage of our country for many decades, to slash prices on drugs and pharmaceuticals by as much as 400, 500, and even 600%. In other words, your drug costs will be plummeting downward. And I used the threat of tariffs to get foreign countries who would never have done it to pay the cost of this giant dollar reduction. They stopped ripping us off, and it began as of 4 days ago. There has never been anything like this in the history of our country. Drugs have only gone up, but now they'll be going down by numbers never conceived possible. It's called Most Favored Nation. And no president has ever had the courage or ability to get this done until now. The first of these unprecedented price reductions will be available starting in January through a new website, trumprx.gov. And these big price cuts will greatly reduce the cost of health care. I'm also taking on the gigantic health insurance companies that have gotten rich on billions of dollars of money that should go directly to the people. The money should go to the people, that's you, so they can buy their own health insurance, which will give far better benefits at much lower costs. It will be far better health insurance. The current Unaffordable Care Act was created to make insurance companies rich. It was bad health care at much too high a cost. And you see that now in the steep increase in premiums being demanded by the Democrats, and they are demanding those increases, and it's their fault. It is not the Republicans' fault. It's the Democrats' fault. It's the Unaffordable Care Act, and everybody knew it. Again, I want the money to go directly to the people so you can buy your own health care. You'll get much better health care at a much lower price. The only losers will be insurance companies that have gotten rich and the Democrat Party, which is totally controlled by those same insurance companies. They will not be happy, but that's okay with me because you, the people, are finally going to be getting great health care at a lower cost. Another major focus is the cost of energy. For years, the radical left Democrats exploited the green energy scam as an excuse to funnel many billions of dollars into their own massive slush funds as their energy restrictions drastically drove up prices, and they drove them up at record levels. Electricity costs surged 30 to 100% under Biden, and the typical family lost $5,000 to $10,000 in higher energy costs. Think of that, $5,000 to $10,000 you lost. On day one, I declared a national energy emergency. Gasoline is now under $2.50 a gallon in much of the country. In some states, it, by the way, just hit $1.99 a gallon. And within the next 12 months, we will have opened 1,600 new electrical generating plants, a record, and it's a record that won't be beaten by practically, I would say, by anybody, or certainly not very soon. Prices on electricity and everything else will fall dramatically. The Democrat inflation disaster, again, the worst in the history of our country, also robbed millions of Americans of home ownership and indeed the American dream. The yearly cost of a typical new mortgage increased by $15,000 under Democrat rule. In 11 months, we've already gotten that annual cost down by $3,000, and it's coming down a lot lower. Wait till you see. The numbers are going to be shocking. And I'll soon announce our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot, and mortgage payments will be coming down even further. Early the new year.
Welcome back to Power Breakfast on CNBC TV 18. Now let's talk about the biggest news that came in last evening. SEBI has approved the changes to the mutual fund expense norms, thus reducing the headline expense ratio after deciding to exclude statutory levies from the expense ratio calculation. Yash is here to give us more details on this one. Yash, over to you.
Well, we had reported on CNBC TV 18 that market regulator SEBI's board is expected to take up the proposal of mutual fund total expense ratio, and the rates which it had proposed in the consultation paper are likely to remain at same levels except for certain minor changes. That's exactly what has happened. SEBI's board did approve the mutual fund expense limits, and the rates are largely similar to what had been proposed as far as the consultation paper itself is concerned. Now, interestingly, what has happened is that the concept of total expense ratio, market regulator SEBI has bifurcated that concept into two parts. BER, which is base expense ratio, and this rate would be excluding the external charges or external, statutory levies or duties like STT, CTT, GST, stamp duty, SEBI fees, exchange fees, so on and so forth. The rationale behind doing that is because these charges are not received by the mutual funds, but they go to external different parties. And also, these charges are not in the control of the mutual fund players itself. What is in their control is BER, which is the base expense ratio, and those ratios and the limits there have come exactly at the same levels as what was proposed in the consultation paper. Of course, these other charges over and above the BER, not in the control of mutual fund players, and hence have been bifurcated. Another important relief that came for the mutual fund industry was in the form of the brokerage charges. SEBI, in its board meeting, has approved the brokerage charges, and the existing brokerage cap of 12 basis points, which includes these external levies, that has been reduced to 6 basis points. The fear somewhere was that it would be reduced to 2 basis points for equity transactions, but it has been kept at 6 basis points. For derivative transactions, from 5 basis points, it's been reduced to about 2 basis points. Here, the expectation and what had been proposed in the consultation paper was 1 basis point. So, of course, on both counts, equity transactions as well as derivative transactions, the brokerage charges have come as a relief. The limit which has been kept there has come as a relief for the mutual fund industry.
Absolutely, Yash. Thank you so much for that. We'll keep an eye out on those AMC stocks, the broker side stocks. So that is something we'll watch out for. But on that note, we're going to step into a very short break. Stay tuned in for more on the other side. Welcome back to Power Breakfast on CNBC TV 18. A quick check in terms of what the US market did. Obviously, they ended in the red. Whether you look at the Dow, S&P 500, Nasdaq, all of them closed with gust in yesterday's trading session. S&P 500 futures right now are very muted. So that is what we'll keep an eye out on. We had just heard the commentary that came in from President Trump as well. So maybe we'll see some reaction to that in tomorrow's trading session for the US market. Even Indian markets, we'll keep an eye out on that as well. But Asian markets, that too have opened up in the red, following suit with what the US markets are doing. As of now, Hang Seng Taiwan Index holding on to red, as well as Nifty implied open is indicating a red start for the Indian markets, down around 10 points now. So yes, a bit more muted. When we started the show, it was more than 20 points. Now 10 points decline is what we're keeping an eye out on. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.